S&P staged a major reversal today. Nasdaq cratered 1.7%. VIX staged its first higher high. Snow down 14%. Meta staged a nasty reversal, and we saw this earlier with Netflix. We'll talk about what it means. NVIDIA lost $5 in minutes today. We're going to talk about what this means and what to do going forward. Stocks collapsed 5%, erasing 2 weeks of gains. Is this the beginning of the end? Did Powell just shoot the tech rally? Or is it time to buy the dip? Let's get to it. Welcome back, everybody. Well, we have a lot to cover, short time to do it. Specifically, I need to go through gamma with you in some form tonight because that's what's affecting the market the most, specifically for your option traders out there. So I'm going to give a real quick lesson on something, specifically on puts and when to get out, because I see some troubling things happening with people trading puts, specifically in the community. But I want to go over it for everybody for tomorrow hits with Jackson Hole. We all know tomorrow is a big day, but I want to just point something out. This is the 3-month divided by the 1-month VIX. And these are the pivotal points for the market. Now, why are they so pivotal? Because when you outperform that way, it means one thing. It means that you are moving much faster than you've ever anticipated to move. Because if the 3-month was moving just as fast, then we would know what's going to happen, right? We would know how to play that. And you can just see that these are extreme readings. For example, if we just take a look at this here, you can see these levels pretty clearly, right? I mean, it's not rocket science where they are. And you can go take a look at what the S&P did from the pandemic to the great financial crisis. And what these areas have done in the past, this is just an anomaly up there, but what these have done in the past is they have marked significant bottoms. Now, that does not mean that market goes straight up. So let's preface this. We came a long way in a very short period of time. And we did because we had the single greatest move on the VIX that we've ever had. So I'm going to say that again. We had the single greatest move on the VIX that we've ever had in the shortest period of time. In no other time in history have you gone from 65 to 14 in 9 days. It has not happened. You went from 65 all the way down to 14, and it took a whopping 9 days, 10 days to do. 10 trading days. Actually, you did it here, so it was 9 days or 11 days. You had a weekend. So that is something that you've never seen. If you go through any of these other significant events, it took weeks to go off. And that still, if you were here, you stayed elevated for a period of time. So you pop, you stay elevated because people are scared, specifically here with the pandemic. But you have these other anomalies. But the 3 that I pointed out that were most significant was, of course, the great financial crisis. Look how long you stayed elevated for. You stayed elevated for years. We lasted 9 days. So of course you're going to have a whipsaw, and of course you're going to have some volatility with that. Now, what you can do with this, people say don't use technical analysis on the VIX. That's fine, but you have to realize that it's human behavior. So what you can do with something like this is just take the peak and just drop a line to the low, which was 2 days ago, 3 days ago. Click on settings and just drop in some semblance of levels so you can get a sense of how crazy this was. Let's get rid of the top end. I'm going to just put the 1 in and then say, okay, well, a bounce to 26 alone is just 23.6%. Could you retest that? I don't know. You're going to need something. Now, could Powell do that tomorrow to get us over 20? Maybe. But overall, you're going to need an event. I think what you're doing is just working off the fact that everything was so rosy. We went from, boy, we have massive problems. Everyone remembers Jerome on TV. If we don't get 150 basis points in cuts immediately, the sky is going to fall. The sky did not fall. Everything was fine. He came out 48 hours later and said, oops. So we're starting to see this here. We had a Japan PM resigned. So we have a lot going on. We all know that there's a lot going on in the market, and we all know that this is not normal. So it is possible that when you get a action, you're going to get a reaction that is equal and opposite. This was the reaction. This is what happened after. And now you're just seeing some reverberation of that. I mean, what came out today to change this? For me, this fits into the premise of technicals. So we got to a point here where we were pretty exhausted. And we've been talking about this for some time. Specifically, this got to a very specific count for those that used a mark. This is a 9. If you don't use the mark, you don't know what that is, and that's fine. It's not the end of the world. But when you start getting to those 9s and you start to see this, these are points of either exhaustion or there are massive push-throughs. So this started out as a push-through where we had retail buying early this morning and we expected it to hold. It does make sense to get out of the way before Jerome speaks. You had a massive run. No one's expecting this kind of move, but you had a lot of like weird anomalies going on here, and we're going to talk about them in a second. But if we take a look here, for example, on the 5-minute, you just see that we're up at 9:30 and then we're straight down. Didn't really feel like that, though, did it? You had these little bounces, you had some returns, then you had more selling, washing out, the retest, and then the end of the day. It's not really the end of the world to drop 75 basis points after what you moved. I think it's the end of the world to think that the market doesn't go down. This is probably one of the greatest that you've ever had as far as moves. You've never had this many days, I don't believe. I think we had 10 days in a row, something like that. The last time you had anything even comparable to this was November 23. And of course, you're going to have pullbacks. Now, if you look at the run in November 23, just to kind of put this in perspective, this is what you look like on November 23. And if you look at what happened here, okay, you had this massive drop that encompassed 3-4 days after you rallied. So you had 1, 2, 3, 4, 5, 6, 7, 8, 9, massive drop, reversal, and then we went on our merry way. What you're doing here is you're working off the overbought. So in all the categories that I use, I would construe this as 2 of 3 of them. So in other words, if we look at the stool and said, here's the macro stool, you have Powell tomorrow. You don't really have anything fundamental that's going to change the game right now unless someone's going to pre-announce earnings, because earnings tonight were okay, they weren't great. And then you have the technical side of it where you're just completely overbought and you're due for a correction. RSI has been pointing this out for, a while. I went over it last night's video, but the title wasn't good enough, so no one wanted to watch it because they like sensational titles. So don't blame me, blame the game. So here you are, and you can kind of see how you're rallying right here, the pop over, the reversal, so that must be the end of it. So you have to kind of ask yourself here, is this time, is it different? Because if you were trading back here, and you're watching this right here, and this is what you have when you come in one day to trade, and you're like, oh, we're definitely going to keep rallying. Things look great. And then the next day, all of a sudden you get this. Well, you're not going to be too crazy about buying the market, right? And then the next day you get a reversal. Am I saying that the next day you're going to get a reversal? No, but I do find it interesting that that was a Thursday, tomorrow's a Friday, and that's a Friday as well. Do with that what you will. It probably means absolutely nothing, but I just find it interesting that this took place, this rally, right around the same time. This was a Thursday what we sold off. This is a Friday. If you don't find that interesting, then you don't find that interesting. I think it's pretty interesting. So again, here we are again, right into it. Do you reverse tomorrow? No one has a clue. The way that you're going to have to look at this is to understand why you came down, which to me is just technical. And then from there, we'll have to figure it out. Now, if you go and say, well, why would you just say it's technical? The bond market really did not sell off that much. And if you look at the bond market, and we're not here, let's take a look at the 2-year and see what the 2-year did. Well, the 2-year didn't even move. So then if we go and take a look at this and just turn this into a line chart and say, okay, well, here's TXN. All right, so there's TXN, okay. And then let's turn this into the SPY. And we'll put the SPY up there. And then let's just throw in the dollar Japan and for a while here, because that'll be the new thing that everybody will want to worry about. Everyone will become an expert in the yen. And then, of course, we'll just throw in the dollar for good measure. And let's throw in RSP. And now if we take these, we overlay these into a 1-minute chart, and let's just begin the day and see what happened. So you can see around 9:30, 10 o'clock, but let's go to that 9:30 level, and this is somewhat important. You can just see that, okay, from there, yep, yield rose, but the dollar and that Japanese yen trade, they're basically in line, which is usually how that's going to go to some extent, right? And then what are you seeing here? You're just seeing RSP follow the SPY. Do you have anything really different that took place, that transpired? You really don't. You're pretty much line for line. You know, the only thing that you could really say here, and I think that this is significant, it's why I'm pointing it out. If you look here on RSP, you broke and you held. And if you go and take a look here, okay, you didn't hold here, you broke. This would lead you to believe, and I'm going to tell you why I'm showing you this, and this is by looking at relative strength, this is how you figure things out. We had a guy in the room today that's been with us for a short period of time, but he's picking up some things, and I'll show you this. He just absolutely nailed like when we reversed right in here. And you just saw it. And it was very clear that all of a sudden that we just had that red nasty bar. And you know to watch the RSP now because you're looking for the equal weight, right? You're looking for that diversification. But let's get to this right now and get back into it. So why is this so significant? Because they're getting out of the big 7 and they're diversifying out. That's an important note because if they're getting into RSP again, then we want to go and take a look at that. So what we would do with something like that is maybe just get rid of the dollar for a second and just focus on that and say, okay, well, that's somewhat interesting. And we could leave the 10-year in, but for this, let's just take RSP with it for a second. We'll double it up. For just a moment, we're going to click off this, and this is going to have to stay unedited. By the way, if you are on the wait list to get into the community, please be looking for an email because after this batch And if you're not, if you're in, you're grandfathered in. If not, then you're not going to be grandfathered in. And then I'm going to put it on pause for a period of time as we get through this again. So I don't know when it'll open, if it'll open again this year. So just make sure you're on the list. Now, if I go to August, which is what I'm trying to do, August 5th, what do we see? We see that flip from August 5th to here. Okay, so is that important that the SPY is here and to here? Yeah, that's important. Why? Because when we went back and we used July 11th, we had a completely different flip, right? That's when we had the negative CPI month over month. And that's when equal weight worked. And that's what was lifting the market. And then what happened with the S&P? The S&P was weaker. RSP was stronger, and the S&P was weaker, and RSP was stronger. Yes, I said it again on purpose twice. Hopefully you're getting what I'm putting down. So that if we go here and we take a look at August 1st, what do you have? Well, you have the SPY is stronger, and you have RSP is weaker. So this one outperformed. Okay, I got it. To say it with me, I got it, Rocky. All right, so here we go, and then we're going to look at the 22nd. Now look at what's transpiring. RSP is outperforming. So this would lead you to believe that you are going to see mega caps start to get a little weaker here. And you can use something like that because that is how you determine this is equal weight, this is market cap. Now, is this important? I think it is because I think they set us up, and I think they've been setting you up. When I look at it, I think they've been setting us up all week. Now, I did 2 trades because people say, do all your trades work? No, I should. That's why I show that ratio all the time. I think I'm at like 53 or 54% on the year, but I have this really enactability that you should have too to get out of losers and hold winners. I know it's an amazing concept, but it does work. So here's what's got me, let's call it vexed. I don't get to use that word too often, and it would be vexing. And let me just show you this. If you look right here, they got you right over on Meta. And once they got you over on Meta, it flipped. Now, once we saw that flip, it was on. Everybody had to get involved. And what was bothering me yesterday and the day before was this, just how fast it was. That's not how this goes. That's not how any of this goes. This is just manipulation. It's what it is. They're just able to do it, right? So they got you there, and then they pull ye old flim flam. Oh, we made the higher high. Everybody out there, I actually had one guy today just say, oh, that's a perfect technical breakout of so-and-so. And I'm not going to say who so-and-so is for obvious reasons. And I'm like, that's everybody's technical breakout. And the reason that I said that was this. When they do this kind of stuff in this kind of tape, which it's weak, you're being set up, okay? You just don't know. It's like Buffett used to say, or Buffett stole the saying, I believe, if you don't know who the fool is at the poker table in the first half hour, it's you. So when you start to see this stuff, you want to pay attention to it. We actually did a short in this today. People kind of thought I was off my rocker until it worked, but I'll actually walk you through that because that's a great example of why you need to understand gamma. But before I get there, watch what else they did. But wait, there's more. All right, so here's Netflix, right? I'm gonna watch this nonsense. All right, so what they did here, does that look familiar? Well, that's exactly what they did on what? That's exactly what they did on Meta. So if we go here on the daily, I couldn't believe that we were bidding down today. We actually went long this and made money, but very quickly. But I'm not getting the follow through. I know I have weak volume. Historically, this is the weakest volume out there. In other words, this week and next week are the weakest volume in the market. Right now, you're averaged on the market 40% of the S&P average 20-day volume. So it's not even half the volume. So they can play games. But you see what they did here? They popped you over, got everybody giddy, okay? And then they just rug pulled you. They're looking for supply because they have demand and they want people to get out. So after this move, there are people up here that are like, you know what? I'm just going to get out, and they're getting out. Does that mean that they're going to stay out and not get back in? No. What we're trying to do is get through the week. Okay, that's what this video is doing. The Saturday videos hook us up and get us ready for weeks and the week ahead, if you haven't figured that out. But this video is to get you through tomorrow and the next couple days. You need to be cognizant of this kind of breakout, and then do you have follow through or not have follow through? This is very important because this is very telling. I did 2 trades. And it was literally the most hot potato trade that I've done. And this is why you have to honor stops. But 2 days in a row, I did this trade. And I'll show it to you, and I'll show you the difference on how I knew that, for lack of a better term, I was hosed. So see how you're hitting our level right here, and then it bounces immediately, hits the level, bounces, hits the level, bounces, hits the level, and what's it do? It's like taking a little nap there. And I'm just like, oh, I got an issue. Because all of a sudden, that means I have supply. This is the 3X. Fund of FNGU. So if you're ever trying to figure out how to go large, long, all big mega tech at once, you're staring at it 3x'd. It's also the inverse when it doesn't work. And guess what? When that broke here, that was it. It never came back. And then from that on, you can just see straight down and just completely imploded. And when this moves, it moves. I actually like shorting that more than going long this, which is the exact opposite. But you can see this is systemic. It's all day long. So I would view this as technical ahead of Jackson Hole to get us out of the market. But when you start to see that kind of behavior, you want to pay attention to it. For me, what got me today in doing this as a short was simple. Once they got us over, and they got us over that level, the entire market started dropping. There's no way they're going to be able to keep names like this up unless they're news driven if the market's going to come in. So as the market's coming in, they're still trying to convince people that this is going to go higher. It's just it's not feasible that a very large company like this is going to be able to stay up. And you could start seeing it even with the cracks with Apple. So what you're doing is you're looking for these cracks, and then when they start to happen, in other words, like Apple's falling apart here, right? And then at the same time, Apple's falling apart, mysteriously, Meta's just going to go higher. It's not going to work that way, specifically when you're this highly correlated to the market. And it's always, I'm going to just say this, it's always important to understand how highly correlated you are to the market. It's one of the things I preach in the community a lot. If you're highly correlated versus lowly correlated, you watch the markets and the indexes and the sectors more. If you're lower correlated, then you don't. After every rally and collapse or correction, the correlation basically doubles. So you're basically over the correlation at this point. You might want to listen to that again. You're at like 0.4 right now, and 3 weeks ago you were at 0.2. So it's basically double. That's why it's all moving at once now. You'll notice it's like one big trade right now, right? That's why I'm leaning more towards ETFs, like the levered ETFs than individual names for trading. Anyway, once this starts to break down, you can see it, but they're playing with you the whole time. But once you get over a level, and if you can't get back over that level, then that's telling you everything that you need to know. Now, this part's important. So they lift you up, the retest, the failure. This is why I always use closes. Had it closed over here, I would not have been as interested. Once I pop over and I see them do this, I know that I have a shot. So I shorted into this, and then it rallies, but it never gets over. And I leave the short on, and I'm just letting the short do its thing. And then all I'm doing is marking these bars down as very specific levels that I'm going to use, right? Once I do that, it just establishes the trade, and then it starts to break down. I'm getting out while the trade's breaking down. I can do more of this on Saturday, but if you're interested, just comment below. As it's breaking down, I'm getting out. Okay, this is a really important concept. I'm not waiting for the end of the day. And the reason for that is I want to get out when the getting's good, right? And I want to get out when the gamma's squeezing, and I'll show you why in a moment. But here, watch this trade. I mean, good Lord, you gotta be kidding me. Look at this thing. It's just crazy. Same thing as yesterday. I wonder why. I mean, you might as well just buy puts on Meta. Like, there's no way everything else is going to start rolling, but Meta, for some reason, they did this yesterday, and then it dropped $10. It's by the 540s. I mean, you'll know super quick. How's that going to hold? I'm going to pay $390. I'll know fast. They're going to be right or wrong. All I got to do is not break that level. If I do, just close it. I'm in. I'll tell you in a minute if I'm going to be right or not. I might have a problem. See, I'm not down 50% on that bar. I may have an issue here. I'll be getting right out of these things because I should have at least finished 50% down on that bar. I'm not even close. My puts are actually going up in value, which I don't really understand. I mean, that's forming a flag. That's going to go against me, I think. But just let it play itself out. Yep, 460. I haven't pulled anything out yet. It's still not a disaster. It's still not really breaking. Not as much as everything else just broke. You can easily flip there and go higher. You might retest up here. There it goes. There they go. Good. So now I'm at $5 on those puts, 510. I'm going to close some of those puts at 510. That might be the beginning of it. You might get one more bar down like that, and I'll close the rest of them. Made $1 there. Now, hopefully you found that helpful, but I want to add one thing to it. A lot of people get this wrong, and I just want to explain it. So when you're dropping like this, the options go up in value, obviously, but it's the gamma that's making that happen. For example, when you're here, okay, which is right around that 1140, versus when you're at 1 o'clock, even though you're at the same spot, and it's been longer when you can have the time value come out. Even then, even when you're starting to see this drop at like 130, you're still doing better on the option here, selling in here, than you are selling here. Let me show you. So for time's sake, I'm not gonna have time to edit this, but I can do it in greater detail on Saturday. Just comment below. Here you are, and if you look down here, you can see the timing on this. So this is 1150. Here you are right around 1 o'clock, and you can see that you're still not back to that level, even though you're over. If you have to say, well, when am I finally over? You have to come up to about this level right here at 5, which would put us right around the tail end of the day, and I'll show you on the chart. You can see it right here, how that's lining up, right? So let's take a look at that now here. Now, you see that level? Let's drop this down and squeeze this over. So if you mark that off and you realize that this is going to be the inverse of that, I'll just drop it in the top corner here. See how you're dropping down and how that correlates here? Then you're rallying back up, and when you're rallying up, how you're losing all of that, right? It actually takes you back all the way, which is kind of crazy. But once that happens, and then you start rolling back to here, well, that only takes you to here on the option, okay? And I could do a much better job of this, but obviously I have to edit it and I don't have the time. So then not until that 130, not until you fall completely to new lows, do you even take out a high. And that high up here, which was $1 more, is the equivalent of like, I don't know, it's like $3 or $4. It's about $4 difference to get that extra buck. You don't even want it. You just want to get the heck out of it, because what's crazy is getting out here was just as good as getting out here. Okay? It's really important to get this concept, because this is a huge mistake that people make. Now, I'm going to give you one more tip for tomorrow. See this long red bar down that encompassed everything? You're going to obviously probably bid up ahead of this, right? Because everyone's going to have bought puts, and then the market makers are going to want to make money. Your job tomorrow is to mark off the demarcation lines of that bar on the Qs and on the SPY. That's your job if you're a day trader. It's very simple to do, but you want to watch these levels closely. If you break this, right, usually what happens with this is you get the hopes and the prayers people, and you'll bid up, and they're like, thank God it's over. I'm so glad I held my positions. And then wham, they undercut them, right? And they're going to have to swap them out, and then you're going to see what's really going to happen. It is very rare to not test this level and break that level, and you get one day of selling. What you have to look for, in my opinion, is this. On the hourly chart, you want to watch these levels. So if you come here to that level right there and how you've held there, look where you stop. Okay, so this is a really critical level. Now, if you overlay this level and you do the same thing on the S&P, you can see how we broke right here. And we've been talking about this for days, but how we broke right here, once that happened, that was it this morning. And then from hourly, it just got worse and worse and worse. So, and you've broken. So this is telling you that you're going lower, right? Now, you'd want this, and this, again, hourly. Please understand the time frames. You need this to start curling and turning up. Now, if you go to the 4-hour, you just cracked. You just started, okay? So does that mean that you have to break? No. You can cross, you can go sideways, and you can retest. But just understand where you are in the pecking order so that you can act accordingly to what's happening. You want to trade what's happening, not what you think is going to happen. That's it.